I thought I'd do a quick cheeky live for you just to answer a few questions, partly because I felt like having a bit of a break actually and from emails and the like. So go ahead and ask me any questions you've got about the market and about inflation, about crypto, about stocks, about equities, what a hedge fund does, about SIPs, ISAs, savings, pensions, any questions at all about any of those subjects. Remember, I've got a campaign that I've launched to teach 1 million people how to be better investors, use all my education from my various books and my TV show on Bloomberg, and all of that's free, converted into videos and articles. That's on campaignfor1million.com, campaignfor1million.com. So you've got that there, but again, ask me any questions you have at all. I thought I'd just do a quick update for you on the markets, and partly because, like I said, I got fed up of doing emails this morning and a variety of other things, so I thought it'd be a good break to do this. Also, as well as campaignfor1million.com, you can download a free copy of one of my books. I've written 18 now, would you believe? My first one was when I was 27. As you can see from the hair color, I'm no longer 27. But you can download a free copy of Investing Unplugged, which became an international bestseller. It was about my time at Bloomberg and how the media uses news to move markets in a way which, whilst it's not a conspiracy or intentional, can wrong-foot investors. And it shows a lot of data that I used in my FT columns as well, my Financial Times columns in there. So it's a really good read. It's completely free. I've made it downloadable and digital now. I've earned enough from royalties, thank you. And again, if you go to campaignfor1million.com, you'll see that there. Okay, I've got a question. How can I join a hedge fund? Well, lots of applications to a variety of funds, in the same way of how do you join any company that you want to work at. And you've got to work out, well, what do you want to do there? What value are you adding? If it's in an analyst position, then they're going to look for certain skills associated with that. If it's a very quant-driven fund, they're going to want somebody with very good mathematical or engineering skills. If it is more generic skills, then obviously you're going to have to apply in the same way you would anything else. So if you look at, say, a Winton, D.E. Shaw, Aspect, AHL, have a look at those, research their backgrounds, look on LinkedIn, look on their websites, look at the kinds of people who went there on LinkedIn and their CVs and bios, which will be on LinkedIn. So you'll get an idea of, oh, okay, that's what skills I need because they're working there already. So that's one way to do it. How about any idea of a modern day security analysis? You mean the book, the Ben Graham book, wasn't it? Wasn't it Benjamin Graham? A modern day one. In a way, it almost doesn't need modernizing. But it's a good question. I don't think it needs modernizing, and I'll tell you why. Those fundamental truths which were mentioned in that book, which became then the basis for which Warren Buffett, Charlie Munger built their, what became at one point the world's biggest company, and I think number 3 or whatever. In that book, the security analysis, or was it Dodds? I forget who wrote it. Anyway, was the fact that you're still looking at cash flow. And this is for all of you, whether you're going to get a job in finance or whether you're going to do anything else, or you're managing your own portfolio, or you're running your own business. Cash flow, P&L, balance sheets. And those are 3 things that the businesses were looking at. And those things haven't changed. Some of the accounting measures might have changed a little bit. About 20 years ago, it became the vogue to look at EBITDA, earnings before interest, tax, depreciation, amortization. But that myth soon got busted, that there was some great value to look at those things. So what I would say is go back to the original source. There's nothing wrong with it. I'm taking motorsport engineering at uni. Fantastic. I went to F1 once. The other thing is, a lot of you on here will ask me about university, which is great, and will ask me about accountancy, finance, and all of that's fantastic. I want you to consider also modern careers in the areas that we're involved in. So whilst I set up the hedge fund 15 years ago, and 15 years ago I was probably a bit late to the party, today would I set it up? No. Today I would look at financial technology, which is a business we're in as well. We spin out technology, and financial technology companies are the ones getting funded. They're the ones becoming unicorns a lot quicker than the traditional career companies are. How do you find them? Well, if you look on the venture capital websites like Sequoia Capital or Amadeus, you'll see who they're funding, or Andersen Horowitz, you'll see who they're funding in the fintech space. The ones who are getting funded are the ones with money to hire people. So have a look at those, and they're the ones where future is. Urban planning, a good career. I just couldn't tell you. I just wouldn't know. I know smart cities is growing, but urban planning, I wouldn't be able to tell you whether it's a good or bad career. Sounds good. Just finished my A-levels. When is your next webinar on trading and investing? I haven't planned one. I get so busy with a variety of other things, so I don't actually have one planned at the moment, I'm afraid. But keep having a look at, you'll be on our email list. If you're on campaignforamillion.com, you'll get an email on there, and I've got a free Telegram channel there. So, you know, when I get data like I have over my shoulder that I think is worth sharing with people, I just drag and drop it and send it to my Telegram, or one of my team will send it to you guys. They actually manage my Telegram channel most of the time. Any thoughts on the crypto crash? Toss a coin. You know, it's going to go up 10x or it's going to go to zero. I don't know. Nobody's got a crystal ball to know. I can make a case for both. I suspect it's not going to go to zero. The way the momentum keeps carrying on with it, I bought some Ripple and Ethereum, I think it was 2 or 3 years ago. Well, let me put it this way. I bought it at a price such that I'm down 50% on my Ripple. Okay, so you just work out when was Ripple double the price it is today. That's when I got it, which I think was 2018, might have been 2017. Anyway, I'm down 50% on my Ripple. So in case you think, oh, secret sauce to it all, I'm up a bit on Ethereum. You know, I actually thought of the two, Ripple was going to do better than Ethereum, although I know both languages are incredibly useful, but the languages are not correlated, other than just marketing gimmick, to the coin. They're very different. And how do I know that? I know that because I met this guy. See that guy? Met that guy. So I went to see them. I said, hey, listen, guys, I've got position in XRP. And he said, XRP and Ripple are two different things. Don't confuse the two. The language we use of Ripple to transmit money, which, you know, Bank of England might be testing out to see if it's any use, is very, very different. Is very different to the coin. They're not correlated. Hype can push up prices of assets. I mean, just look at Tulip Mania. And that doesn't necessarily mean you're going to be, you know, it's a bad thing to do. It's just risky. Any apprenticeships? All my apprenticeships, but look, we're in lockdown, and so there's nobody in the office. I can tell you that now, and I've got no plans to bring everybody back physically. On the private equity side, we've got two partners. One is in Switzerland anyway, in Zug, and the other one is in Munich, in Germany. So, you know, our office is in Mayfair. We've got no plans to open anything up anytime soon. Nobody's in a rush to go back to all of that stuff. So all my apprenticeships and work experiences are virtual. What we did is we decided that everything that we were using to train new employees, why not open that up to teach people other than those who've been given a job at my firm? Why not open it up to more people? So it's virtual, it's online, and you might say, well, wait a minute, if it's virtual online, that means I'm not sitting next to you. Well, actually, to avoid that problem, through Telegram, I send people every day, my work experience people, my intern people, the documents I'm looking at. And what that does is it gives them that experience of, oh, okay, it's as if I'm there, because I would do that in the office. And then we took all the education training material that we give for new employees and we put it all online. And it's all free. So if you just look at the links in the bio, you'll see there for work experience. And like I said, it's completely free. You can be 16 or you can be 60. We have no issues. You sign up, you can work through it. There's a certificate at the end. You can put it on your CV if you wish. We just wanted to give that extra bit of social mobility to people who didn't get access to an internship at, I don't know, Goldman Sachs or whatever as well. You don't have to be paid to be trained. No, it's completely free. The reason, like I said, we made it free is because if we can impact more people beyond just those who might be in Mayfair, you know, then we can reach people in America, we can reach people in other parts of the world to get them trained up. And education, you know, my education was free. I think education should be as free as possible. So what institutions buying? What are institutions buying? What institutions buying? That's a big question. Have a look on my free Telegram channel. It's in the link in the bio. Social mobility. I grew up in Leeds. in a town called Armley. If you look it up, it's not the most wealthiest of places by any means. So I'm a big believer in using education. Look, I can either transmit money into people's bank accounts. I haven't got enough money to transmit to everybody's bank accounts, or I can transmit education, and I've certainly got enough education to do that, having written 18 books on investing and finance. Hi from Pakistan. I've been to Pakistan once. I went when I was a child. My father took me by road from Leeds in a VW camper van in 1974, when I was a child, to India. It took a month. And we went through Iran, Iraq, Afghanistan, Pakistan, into India, all the way from the UK, so Turkey and all the rest of it. And I've got a passport somewhere, which thankfully is one of the few things I managed to keep from those times, which has got all the stamps, the road stamps. What would your advice be for a recent grad who, it's cut off. What do you think about consulting career in the top 4 whilst trading? Yeah, I've got a cousin at Deloitte. I'm chairman of an organisation called the City Hindus Network, where we've got a whole bunch of... and there's a City Sikhs network, and I'm sure there's City Muslims and a City Jewish network as well. They've got a whole bunch of people in the city at these organisations, and it's another way in to meet networks and build them as well. So consulting, it's good, pays well. Not sure if you're able to answer it, but do you think Siemens stock price undervalued? I've not looked at it, so I couldn't tell you. I don't just look at the valuation, which a valuation of a company is based upon the share price and the profitability assigned to the share price. But of course, as you will know, that's not the only thing which causes share prices to move up. It's expectations of earnings growth, cash flow and cash flow expectations, and dividend yields, track record, momentum alone. So there's a whole bunch of factors. So whether something's undervalued or not is only one factor in the algorithm of what will probably lead to a price moving up. And even when you've got the algorithm down to, you've looked at valuation, growth, income, cash flow, all of those things, it might still not rise up. Top tip to receive seed funding for a fintech startup. Have a look at, there's a website I created, it's completely free resources, called tech2great.com, tech2great.com. And what I've done there is I've listed every single source of grant funding, loan funding, good quality business plans, also every accelerator, incubator that's out there, and strategies for getting funding for your startup. So have a look at that. It's all free. I've put all those resources on there free. And one of the reasons I did it was because obviously there's no point answering the same question over and over again. If you just put it on a website and keep it updated, then it makes it easier for everyone. So tech and then the number 2 great.com, and the links are in my biog as well. You're an economics graduate, so am I. Congratulations. Can you explain tail risk, convexivity and reflexivity? I'm not sure about convexivity and reflexivity, but tail risk, there's this idea that if everything moves on a normal distribution curve, that the tails, the extreme moves, happen more frequently than we realize, and that tails are fat tails. That, for instance, extreme moves in share prices or weather conditions happen more frequently than the data would suggest they should. And that leads to hedge funds blowing up sometimes because they don't think those extreme moves will happen, and they do. Boom, you get things blowing up, and that's essentially tail risk in simple terms. As well, is tech sector as overvalued as in 2000? I've got data which suggests it's not. I was there in 2000. I had a TV show on Bloomberg at the time whilst I was trading, and so I covered it all. You know, I was the revolution will be televised, as it were. And at that time, if you remember, there were no profits in these companies, which you might say that's fine. Amazon, proudly said we don't intend to make a profit, we want to reinvest, but they weren't all Amazons. So now the difference is tech companies. I mean, I don't want to talk about the sector as a whole. I'm a bottom-up investor, so I look at the micro company individually, not a sector as a whole, because I don't care what the sector's doing, I care what a company's doing. And they've got profits. And you just need to look at Microsoft's figures to know, there's a ton of cash flow growth, ton of earnings growth, so it's different. It's different this time, famous last words. I've got my second year banking and finance exams next week. Good luck. Try your best. Keep calm. Eat a banana before you go into the exam. Gets the brain running. And I used to have this drink, Purdy's. And on this, there's few things I'd say you really want to take my advice, but trust me, on exams, you want to take my advice. I I started when I was at my school, when I was 13, I was bottom of the class. I got something like 10% in one subject, 25 in another. 3 years later, I got straight A's and top of my class for all my GCSEs and all my A levels. So trust me, when it comes to exams, there's a few things in life I've mastered. I've not mastered weight loss. I've not mastered anything else probably, but the art of exams I have. So Purdy's was this vitamin drink. Take that, lots of vitamin B you want before an exam as well. Thoughts on statistical arbitrage? Narrow that down a bit. And obviously you mean in terms of stocks. I'll give you an example of statistical arbitrage in trading. So you might have merger arb. Somebody does a takeover bid. That's the takeover price at 100. The share price is at 90. It should, so you buy at 90 knowing you should be exiting at 100. Now there's all hedge funds who do that. One of the people I interviewed for my book, Mind of a Trader, was a chap called Bernard Opity, who now runs a $2 billion hedge fund called Centaurus Capital. And Bernard, when I met him, was at Banque Paribas, the French bank, as a trader and really well renowned. He became a mentor and a friend and all the rest of it. Bernard did merger arbitrage, so it's statistical arbitrage in a way, but I suspect you mean something different. And I've written about statistical arbitrage in the sense that where a share price is and the likelihood that let's say it's fallen, let's take an Amazon, let's say it's fallen 20%. Statistically, in 20 days, statistically, it's unlikely to fall another 20%. It's more likely over the next 250 days to go up, rise in price. So if you mean that, I've done some detailed analysis on this, and there's very few stocks which have that distribution curve where they're going to do that. If they fall 20% in 20 days, then you've got a high probability in the next 250 days they're going to go up. Very few companies. Costco has that pattern. Microsoft has it. Amazon and Alphabet and Apple, you'd think it would have it, but actually they do, but they're a bit more volatile. The spread is wider, but again, the links in the bio will give you some research on that. The answer, yes. Do you trade Forex market? Yes, I do. I'm currently 18 and just learning to trade. Trading, if you look at the data from places like the FCA, the regulator in the UK, 80% of people lose money trading. So just be careful on that. All futures, not really. We did an oil trade last year where oil was at record lows, and it was not because we got any insight into oil. It was simply because if it's at those lows, then we estimated that certain oil products will double in price, but at least we're willing to wait 3 years. Actually, as it happened within a year, but we didn't want to gamble that it was going to happen in a day, a week, a month, or 6 months, because that's higher risk. We gave ourselves a 3-year timeline. As it happened, they doubled in a year, so that was fine. Do I wish I'd put all my worldly goods into it? Of course you do, but you don't do that, because what if it didn't happen? What if, it was a fat tail? So that's my experience there. Thank you. My pleasure regarding tech to great. Yep, the risk is crazy just using demo accounts. Yeah, demo accounts for sure. Why risk real money? It's a bit like learning to drive. When you're learning to trade, why would you risk real money? When you're learning to drive, you drive in somebody else's car in the Tesco car park. You don't go out and hire a Ferrari and go on the motorway. You'll crash. So it's the same with trading as well. Did you hear Dr. Michael Burry? I did. Yeah, I saw that regarding Tesla. I've not looked into it beyond that. I mean, Michael Burry, what a legend, and what a film, The Big Short, phenomenal. Well, to be honest, anything. I think it was Aaron Sorkin who wrote the film, not the book, but the film. He might have written the book. And anything by Aaron Sorkin is just must watch. The guy can write so incredibly well. And I have a fascination with writing, not just because I've written the books, but because of the power of the written word. If the skills I suggest you learn, speaking and writing, those are two good. You start getting involved with emotions. Yeah, I'll teach you about emotions. I mean, the reason my very first book in 1997 was called The Mind of a Trader, although the subtitle is Lessons in Trading Strategy from the World's Leading Traders, The Mind of a Trader is because trading psychology was the hardest thing. And I interviewed 10 of the world's leading traders because I wanted to be like them. So I was a student at university and I thought, how do I get to interview them? So I pitched this book idea to them and the FT agreed to publish it. And it included people like Bernard Opity, the hedge fund manager, and Bill Lipschutz, who was global head of foreign exchange trading at Salomon Brothers, so the world's largest trader. The Forex market is the largest. He was global head of foreign exchange trading at the world's largest foreign exchange trading bank. And they taught me a lot. They became mentors, and that's how I was able, 10 years later, to set up a fund. Why did it take 10 years? Raising capital is not easy, my friends, okay? I was going to ask you, do you think crypto is in a bubble? I don't know. No idea whether it is or not. What I do know is I've got this 10-year experiment into which I'm in year 3, where I hold some cryptos, and we'll see what happens in another 7 years. And then I'll tell you in hindsight, oh yeah, it was always a bubble. Or I'll tell you, no, it wasn't. Look at me. It's life-changing amounts of money. Who knows? Okay, and that's the only way I can trade that. Okay, any trading strategy, if I'm not sure, I have to elongate the time frame. If you want to mitigate risk in anything you do, you elongate the time frame. And you might think, well, I don't want to elongate the time frame. I want to narrow it down. Well, then you're taking more risk of being wrong. Why do you give this time when the audience is so low? Why not another platform? Because you know what? If you change the life of even 1 or 2 people, I get phenomenal feedback from people. And also I started off, I said I've got a bit tired of doing emails, so I thought I'd do a chat. No, I'm not sad and lonely. So yeah, no, I've got other platforms. I've got Facebook, I've got TikTok, I've got YouTube, I've got Twitter. I will probably download this and then rebroadcast it on all those platforms. So I'll repurpose the content, as it were. But I just thought it was useful to speak to younger people about, their careers, their aspirations, their hopes. I think as you get older, you want to leave some legacy of, touching lives and making them better. And I get great feedback from people, really phenomenal feedback from people. And that, I tell you, it doesn't matter what you've got in life, but if you feel making yourself happy is one thing. It's a narrow circle. If you can expand that circle and make somebody else happy, then the happiness you get is more meaningful. And if you can make even more people happy, the bigger the circle, the more meaningful it becomes and the more deeper that is. And if one of the purposes of life is to make yourself happy, then this helps. Would you believe TikTok helps? I have an investment banking graduate role interview today. Any tips? To try and, I was once given when I was doing my Oxford interview, I asked somebody any tips, and the guy said to me, he said, you know what, likability is really important. Somebody's going to have to work with you for a long period of time. Likability. And I was really shocked. I got that place at Oxford, by the way, and I think likability hopefully had something to do with it, and it stayed with me ever since. Likability. So of all the things going through your head when you got your interviews, you're probably thinking, I've got to hit this, I've got to say that, I've got to say that. Don't miss the part of, obviously be authentic, but the importance of likability, because they're going to work with you. You're going to be a colleague. So yes, they want to know your skills. They want to know what you've accomplished. And they will probably ask you, what skills did you use to achieve something? Typical question nowadays tends to be, give me an example of where you used, so that's a fire alarm test. Give me an example where you used some of your skills to achieve a goal that you didn't think you could achieve. That kind of thing, of course. But they also want to see you're human and you're likable. I better go soon, actually. Do you like Ripple's liquidity utility? Would central banks trust an external partner like that? So the governor of the Bank of England, the former one, I met him in India of all places, because the UK governor of the Bank of England was out there on a visit with the Chancellor about 3 years ago. And it was my job to host them at one particular event for entrepreneurs. And they mentioned, and it's public knowledge, that they're looking at Ripple as a means of money transmission. But I think they were just learning and experimenting and all the rest of it. Doesn't mean they're going to use it. So, I thought it was interesting. I thought Ripple would go through the roof. Never did. It fell 90% from that meeting. Okay, so don't think, oh, Bank of England are doing something. And you can Google it on that. Do you recommend getting an MBA or grad degree in finance? Depends how narrow a field you want to be in. I mean, MBAs, I think, still carry some weight. I'd probably say a CFA is really good, but you can do that whilst you've got a job. MBA, if you want to go into management, I know lots of people who don't have an MBA, but if you feel you want to go into management, it is a good signal. Of course it is, but it's a bloody expensive signal. A grad degree would be more, if you've got an MSc in finance, it would be more if you want to be in a narrow field. And the danger with that is you get shoehorned into, you get typecast. He or she is in that narrow space. So there gets a point where I'd say just get on with the job. I mean, as well. Is expansionary fiscal good for your company? It is. And the reason for expansion, fiscal expansion in those low tax rates and more public spending is good because people have more money. Everybody's happy, everybody's spending. In the short term, it always feels good for the individual, for the consumer. More jobs are created, there'll be nominal inflation, so asset prices rise, so you feel richer, easier to pay back debts if you're in the corporate world, if you have debts. So it always feels good. It's just that there might be a price to pay later, and we'll feel the pain of that later on. But in the short term, yeah, it'll feel good. Technical indicators to use to trade Forex. Have a look at my links in my bio. I go into it. We use algorithms to weigh a variety of factors, including things like how close is the price closed to the high for that period and most recent periods. And then we weigh those factors, and only when they're all in sync across multiple timeframes, so multiple indicators, multiple timeframes, and a recent high, so a 2-period high, would we then look to enter. We're very much momentum based on the short term. Thank you very much. Great, thank you. What cryptos you invested? Ethereum and Ripple. More recently Litecoin and Dash, but honestly, it's not based on the fundamentals. I did some research. I wrote some articles a few years ago, and it's going to be a 10-year hold, and it'll be zero. Yeah, it's a bit like I know nothing about art. If I bought some art, I'd hold it for 10 years. I know nothing about art. It might go up, might not. I know nothing about wine. I'm teetotal. If I bought some wine, I'd hold it for 10 years. It's the same principle with this stuff. Who knows whether it's going to go up or down? But I didn't want to be felt that I was left out, Yeah, exactly. You bought XRP at the same time as me, so you're down 52% or whatever. I know I'm roughly that. In the hedge fund, do a CFA or CAIA have more weight? CFA, I don't know about the CAIA. I've not come across it, but CFA does still have weight. It's a bloody tough set of exams. Do you see a shift from monetary to fiscal? It was an exam question that I had in my finals. Isn't monetary policy just another manifestation of fiscal? Do I see a shift of rising interest rates and a cutback in public spending? There will be a cutback in public spending. There'll be a rise in taxes. So we'll have a tightening on the fiscal front, and we'll probably have a rise in tightening of monetary as well. It can be very counterproductive to have loose monetary policy and a tighter fiscal policy. The times you want to do that is if there's certain imbalances on your public debt, which there is now, on your ability to borrow, as there is now, and if you feel that your currency is weakening as a result, if you feel your currency is nevertheless strong, then you might want to be tightening your fiscal and loosening your monetary. I'm getting too technical, but there are occasions when you might want to do that, and we could talk about what they're likely to do and not to do. I think obviously public spending will get cut. I think taxes will rise. I think interest rates might need to notch up a tiny bit given the amount of money that's gone into the system, but I'm not particularly worried. CAIA is more for alternative investment. I've never had a CV from somebody with it, I'm afraid, sorry. What did you study at university? I have 2 degrees. Actually, I have technically 3 degrees. 4 actually, if you count it. So I'll tell you what that is. I have a degree in law, and then I have a degree in philosophy, politics, and economics. Now, I'm going to count that as 1 degree. Philosophy, politics, and economics. You might say 3, but 1. I'm also a barrister, which technically is a degree, apparently, the degree of utter barrister. And at the university I went to, after, I think, 6 years, talking about privilege, you automatically are given a master's degree. I know, hate me now. I automatically get a master's degree. I think it's 6 years. So I have a master's in philosophy, politics, and economics without sitting a single exam. I know what you're thinking. That is privilege. Sorry. So I guess that's 4 degrees, is it? Stupid, isn't it? What does any of it matter unless you're doing something with it? As my grandmother used to say, in Gujarati, you learnt to count, but did you count? In other words, it doesn't translate well into English, but you learnt all that education, but did you make a difference to other people's lives? That's how she measured things. Which I thought was very good. Which university did you go to? I went to, there's 3 universities I'm affiliated with. I had a summer a semester when I was working in Congress, where I was affiliated to Boston University. It was a student exchange program with Oxford University, and I also have a degree in law from King's College London as well. So I did more than one degree. I did two. So there. Yes, kaka kemcho. Yes, I hope so. I do wish you get blessed with brains. Why is HSBC down 40%? I tell you what we did last year. We did an interesting investment in banks, and I put that onto my Telegram channel and stuff, where the banks like Barclays and HSBC, and I talked about this on the BBC earlier this year in January, they were down at like 1997 levels. In fact, my data only went back as 1997, and they were down at those levels. So we said, look, HSBC is not going to go bust. Why it's down to these levels, we don't know or don't care. And we think it'll go up 100%, because it always does when it gets to these levels, within the next 3 years. Actually, it happened within 6 months, but we didn't want to gamble it was going to happen in 6 months. So that was one of those special strategy trades. And it worked out. And you might say, well, if you knew that, why didn't you put all your money into it? Because we didn't know it. For all we know, it could have gone lower. Who knows? You know, that's why you don't put all your money into one trade. Now, let's say we did put all our money into one trade. Sod's law determines it would have gone bloody bust, and we would have been a headline in the news. Please come back to America. I love America. I read US politics at university as one of my specialist subjects. I worked in the US Congress for Congressman Elliot Engel. So I'm fascinated with US politics, and I love the concept of America and the American dream and American exceptionalism, which I do believe in. I'm like anybody who loves any country, including my own. I can also be critical of any country, as we all can, because no country is perfect. But I do love America in broad sense. Hey mate, can you get into banking with a master's in chemistry? Yeah, absolutely, because you'll have the scientific knowledge. One of the smartest people we hired, and I've interviewed her on my YouTube channel, so if you want career advice, go look at my interviews on YouTube with people that we've hired. Kanira Shah, she had a degree from Imperial in engineering, and she was great working for us. So it's really the skills. I like Norway. I went to Oslo once, and it was so expensive that I don't think I could afford to come to Norway. I've flown Norwegian Airlines, though. They're phenomenal. And visit BIB's business school, would absolutely love to. Would love to. If you get me an invite, I'll do it at my own cost. Happy to do it to Oslo. How does one become a trader at the age of 50? You can do it at any age. I mean, you probably don't want to be sitting in front of the screen, because you're 24/7, and the trading we do, we're no longer sitting at screens 24/7. We're looking to do maybe 1 or 2 quality trades a day. No rush. We'd rather do quality over quantity. Last question, because these are really great questions, and I want to answer more. How difficult is it to move from the legal profession, solicitor, to banking? Well, I did. I was a barrister, and then I created my own firm to go into finance. I'm afraid the thing with, if you look at banking, just speak to HR departments and ask them that question, and they'll say, well, we have a graduate recruitment program. You're too old for that. Oh. So I'm not sure what the answer would be in that case. It might be that you become in-house counsel first at a bank, and then you move into banking, as it were. So let's say you went to Barclays and said, I want to join the legal department as in-house counsel. That's a good way in. So that's probably the best way in. Can I do some videos on statistical analysis? I can. I've done a whole bunch. I actually love statistical analysis. Part of my A-level maths was statistics. So there's mechanics and statistics. And I do love statistics, because there's this simplicity and purity to numbers. Anyway, I will do more. I've done some on my YouTube channel. I've done some on my Telegram channel as well, but no, happy to do more. And on my campaignforamillion.com, have a look at that. It's a free campaign to teach more people how to invest, and it's got a ton of free resources, including downloadable trading books, investing books, videos, and articles. Sorry guys, I've got to run now, because I've got to go back now to doing some of that stuff. Okay, thank you very much for your very kind messages. Thank you all.